Yes, welcome back. Now we're going to take a look at some of those smart trade ideas. Mark, I mean, there's been a lot of noise, a lot of wild movements in the market, mostly in an upward direction, and a lot of it triggered by results, which have been either better or less bad than expected, and all of that kind of stuff. What's your view overall about people holding positions into results? I mean, it's a bit mad, really. It's like Russian roulette. But then again, I suppose it depends on timeframes. Taken in its overall, do you get in once you've had the confirmation of strong results? Do you like the idea of going into results with positions? What's your overall sense here?
Yeah, I mean, look, there's a few kind of things. Firstly, as you kind of said, are you a long-term holder of this share? Are you a trader of the share? There are a lot of guys who specialize in purely speculating in the period coming into results. They make, or you can make judgment calls based on the performance of the share, coming into the period. But the other thing to remember is the broad kind of market conditions as well when things are taking place. I mean, we've experienced this dramatic rally over the last couple, well, it is a fairly dramatic rally that's taken place over the last couple of weeks.
Mm-hmm.
So there is a positive wind blowing in that sense. We're looking at a situation where the rand has been shredded. So any shares which are getting results, which have an offshore earnings component, is going to be ramped up and the prices are going to be moved. So you begin to start to work out a balance of probability on certain kinds of stocks. And with Naspers and Richemont in the last week, those winds were kind of blowing very, very much in favor. But one has to make those decisions coming into all kinds of results.
Yeah.
And generally we say, how much of the impending news, the way the market anticipated, is probably in the price.
Correct. So what you're implying is if a company has already put out a trading update, then the results themselves are less of a surprise because, that's supposedly known already. And if there was going to be a move, it would have happened at the time of the trading update.
Yeah, they're giving guidance. They're obliged to give guidance if there is a significant variation from previous guidance or from anticipated results. So you have a touchstone. But then again, dramatically, if dramatic outperformance is something that is not necessarily going to be revealed in as much as dramatic.
Yes, and the forward guidance is also something that's important. So the prospect section of the results might reveal that management is wildly more positive than is revealed just through an earnings-related thing, which is backward-looking.
Yeah, for example, last week SPAR used the term satisfactory in their forward forecast. They believe results are going to be satisfactory, satisfactory, sustained. These are all kind of words there are algorithms indeed, which programs that do that. But those are. It's a little bit of detective work that the trader or the investor has to make.
Okay, but now let's talk about a stock that also did some heroic moves up this week, and that's Naspers. And in that case, it wasn't so much anything from Naspers, but it was results of its most important asset by value, which is Tencent in China, which popped to a new high because of earnings and profits that were higher. So I mean, look at that. There's Naspers over a year. It's sort of drifting around here, making people unhappy, and suddenly, wham! It breaks through 700 Rand a share. Yeah,
I mean, look, 4 billion yuan profit for a subsidiary when you're expecting 3.6 is pretty kind of dramatic stuff. But if you've been watching the price action fairly carefully over the last couple of months, the share did make an assault on 600 and just north of 600, as you can see on the chart, like a month or so ago. There was serious solid interest from the 560s in this share over the last couple of weeks. The share has just been continuously moved up, and the rand has been depreciating. But the results have shot the lights out. There's one other factor that traders should be aware of, and that's the potential for investors or kind of funds or other parties to actually take substantial short positions in the share. When the results come through and they are beyond expectation, a lot of pressure suddenly goes on those short sellers, and they have to scramble.
Covering kind of
almost the reverse of a situation we had with the banking share recently, where you can suddenly get the share kind of scrambling up quite dramatically. Very, very good results, very, very weak rand, and a little bit of short selling of pushed the stock into high levels. I mean, the multiple at the moment is 50. We're looking at 33.9 on forward. So it's a highly priced share.
And you might even find there are people that go short a stock like that because they think the PE is too high, and then they get crushed on the way up.
Yeah, I mean, Naspers, that's probably a burial ground of people who've been kind of shorting their PE.
Yeah, no, I'm very sorry for those guys. Now, what about another one that blew its stops this week, and that's Richemont? I mean, that would be the case in point, where the sector has been a bit mixed, but it's rand hedge, it's better than expected results, it's all the positive sentiment. I mean, there it just hits an all-time high up into the 80s. And believe it or not, you could have bought this thing at 18 Rand a share back in 2008.
Yeah, and I mean, it's a significant stock in the Euro Stoxx indices. It's a bit of a ray of bright light, I suppose, in a portfolio of Euro stocks that we know the results have been, moribund is probably being kind to them.
Mm-hmm.
Stellar results in terms of what they're used to on that side. They have to take this stock in index plays. It has to form a large amount of Euro stocks portfolios. Everybody scrabbles to get it. I don't think there would have been too much short squeezing on this particular side, although there probably was a component because guys like to, sometimes Richemont does get a little bit twitchy, and there have been results before where we've had downside.
Okay, so one final point before we go. I mean, there are always companies having these results-based things. So I would say as an absolute minimum for people that are trading and putting money in harm's way, you've got to know the cycle of events the company normally goes through, because they normally have results at the same time every year. They have trading updates. They have, key developments for underlying businesses which might report. So this is the kind of thing where it underscores the point about how you've got to pay attention and you've got to work hard over a long period in order to do this stuff well.
If you're a value investor, you're the best case scenario really is the stock coming down into a kind of results period, and the results are going to be negative, because then you're going to get maximum value as a kind of value investor.